There are a lot of reasons to refinance a home loan, but these are the top 10 reasons to refinance your mortgage. So, in refinancing, a lot of things can come into play as far as why to do it. Some folks do it to save money, other folks do it because they need. So, it's some of it's a need based, some of it's a desire, right? Desire to save money, desire to do something. So, let's go over all these options as far as the reasons why people do this. And certainly, a couple may overlap in terms of what you may need, but the reality is, find the right reason to do it, and then make sure the numbers make sense to actually move forward and do it. Otherwise, you don't want to spend money, right? So the top 10 reasons to refinance your mortgage. The number one reason, the obvious, lower your interest rate. So lowering the interest rate is certainly the number one reason where people are like, oh, rates move. The phones start ringing for us to say, does this make sense? Should I do it? Now, here's what's interesting. The majority of the mortgage industry does it wrong. They say, oh, you're going to save this many dollars per month and divide that by your cost, and therefore there's your break even. That is wrong. You need to, when you're going to lower your interest rate, you got to figure out why you're doing it. So most people, they lower the interest rate because the cash flow. Every month, that monthly savings, in air quotes savings, the monthly cash flow is lower. So maybe you reduce your monthly payment by $300, $400, whatever it is, but that long-term savings isn't equivalent to that. So that's part of where, if you're doing it to lower your interest rate, make sure you understand the true savings that go with it. Because cash flow, and we did a whole video and blog on this. The cash flow versus your monthly savings, they're not necessarily the same thing, but that is the number one reason people do refinance, is to lower their interest rate to get more cash flow. So that is also essentially reason number two, right? Is to reduce their monthly payment. And you could say, well, isn't that what we just talked about? Well, no. Sometimes, even if somebody has a lower interest rate, let's say because number one was to lower their interest rate, number two is to reduce their monthly payment. And you're thinking, well, how is that different? Well, if somebody has I'm making this up, a 5.5% rate that they've had for 8 years, maybe 10 years, and now they want to reduce their monthly payment, they can go to a 6% rate, meaning higher, and still reduce their monthly payments if they go back to a 30-year mortgage. So again, while the lower interest rate on number one is like, oh, that's obvious, right? You get a lower rate, you should, in theory, get a lower payment. This one, to reduce the monthly payment, and there are examples where people take a higher rate, or maybe they had a 15-year note, right, which has a lower rate, and they go to a 30-year. So even though the rate's higher, the payment will be lower because, again, they're extending their loan term, which absolutely helps them do this. And or maybe they go from a fixed or an adjustable rate mortgage over to a fixed rate mortgage. So again, there's a lot of examples where it just doesn't make sense initially. It'd be like, well, hold on, I'm going to take a higher rate. Yes, but they absolutely may save on the cash flow piece and get a lower monthly payment. So on the top 10 reasons to refinance a mortgage, the number three, changing the loan term. Exactly what we just said. But you think, well, man, why would somebody change the loan term? We did a really good blog about an example where somebody may be 3 years in on a mortgage, say they got a 30-year mortgage, and they want to refinance, and they're going to change their term even down to a 23-year mortgage. And you would say, well, that's a random number, and it is. But in this instance, in that example, by lowering the term, their payment stayed the exact, or it was a few bucks difference, but it was like $3 or $4 difference. By lowering the term, they now accelerate the payoff on the mortgage, which helps them build equity faster and pay less interest over time. Then on the example we ran, it was over 100 grand in savings of interest. So again, to change the term, to go to a smaller term or even a bigger term, like we just mentioned for example number two here. So number three reason is to change their loan term, whether it's to go shorter term and save more money, or maybe they go to a higher term or a longer term and they get lower payments. So again, it depends on the person and what they need or want in their personal situation, but those are really good reasons. Number four reason, cashing out, taking money, right? They may come in and say, okay, well, I need this many dollars to do debt consolidation. I need to do home improvements. I got to pay tuition for my kiddo. I got these large expenses coming up that I got to plan for. I'm a business owner or I want to start my own business. A lot of reasons why somebody might want cash out. And that goes towards more of the need-based in terms of like you need to do it, but it could also be a want, right? Because you may want to do this, right? But sometimes you need to pay off some debt that you have, whether it's I've seen folks take cash out to pay off Uncle Sam, right? They've had debt. So again, cash out is absolutely a great way to do it. The number 5 reason of the top 10 reasons to refinance your mortgage is debt consolidation. So the cash out we just mentioned can be used for all kinds of things, but I will tell you probably the most popular, especially right now in today's market, is to do debt consolidation. You got all that right now at this moment in time. Americans have the most equity we've ever had in our homes. And that's thanks to COVID with all this massive appreciation that we saw during the COVID years. And even since, we've still had great appreciation and people paying down their mortgages. Now they have all this equity, but credit card debt is at an all-time high. It's over $1 trillion in our country. It's crazy. So when credit card debts are sitting there staring at you at 20 something percent, to reduce that debt and get it gone, to refinance, you may say, man, I hate letting go of my 3 and 4% mortgage on my home, but taking a new 6%, I don't love that either. But if it, when you're paying 22 and 25%, it does make sense. So it's to reduce the monthly payments overall, because once those credit cards go away, take that and put it towards the mortgage if that's something you want to do. But simplify your finances, right? Instead of having like all these different credit card payments, people can pay them off. It does improve their credit scores. So that's great because they have no debt on that. And they can go back and start leveraging the equity in their home. So the number 6 reason, and the top 10 reasons why somebody would want to refinance, is removing PMI, private mortgage insurance. So you'd say, well, doesn't MI just go away at 20%? It can if you have a conventional loan. But there are some loans, like FHA, for example, where the MI could be on there forever. So until you refinance, that PMI sticks around. It depends on the loan type. Yes, conventional loan says, okay, if you ended up having some equity at 20, 25%, conventional loans, you can get that removed. But on others, to eliminate that PMI, you do need to refinance that mortgage. So, which is a massive savings because oftentimes it's hundreds of dollars a month that suddenly goes away. So even if your interest rate stays the same, even if your loan balance stays the same, you can change the term. Like that mortgage insurance can be nasty if you got that 20% equity position. So that's the other reason why. So number 7 on the top 10 reasons to refinance your mortgage, switching from an ARM to a fixed rate. So we kind of hinted to this earlier. I think it was in number 2 of why somebody might do this. Well, an ARM, that stands for an adjustable rate mortgage. So an ARM is an adjustable rate mortgage. What that means is it's got some period of fixed, like here's your payments and here's your rate for this amount of time. After that time, who knows? It depends on the market. So go to a fixed rate mortgage means you got that security knowing what it is. And so a lot of folks may refinance just to get that security to go from that ARM of that unknown to, and it depends on the rate cycle too. Like if you're in an environment where rates are going up, absolutely get that ARM gone. If rates are starting to come down, the urgency goes away. So that's that part where number 7, switching from an ARM to a fixed rate, a lot of it depends on the timing, truthfully, or where you are in that period. And if you want to switch over to get, the certainty, the protection against your rate increase, to get that peace of mind, those are all really good reasons. Number 8, improve your credit score. You're like, well, how does that make sense? Well, that your credit, a big part of that, going into the whole credit piece, your credit absolutely depends on the second biggest category. Number 1 is paying your mortgage, or you pay your debts on time. Number 2 is the credit utilization. So by doing like cash out or something of that nature, it can absolutely use to pay off those credit card debts and can improve your scores over time by getting that gone. So if you had a car that's coming up or something to do different, you can absolutely do that. And not to mention, if you say, oh man, I got maybe my house is free and clear. We've seen this on exam. It's rare, but we've seen it where somebody has a free and clear home. They paid cash for it, just don't have a lot of credit. The perfect, air quotes, the perfect credit model is having a mortgage, a car, and like 3 credit cards. So it can help somebody build credit if they don't have a lot to do that. The number 9 reason in the total top 10 reasons to refinance your mortgage is to essentially just, and this is kind of broad, but I get it, is to change it's change in a financial situation. So for example, if somebody is about to make the leap, they think that maybe the spouse is going to go into be self-employed. Or they're going to change because they got a promotion. But now I've seen this where attorneys, they go to where they were, now they're variable income because they made, partner, or maybe somebody loses their job in the house, to refinance and just reset the mortgage to whether it is cash out, whether it is a lower payment, doing something like that, to where if you just change your monthly obligations, depending on what you get, or maybe you got a big promotion, now you just want to pay the sucker off, or you're retiring in the near future. there's a lot of things where just a change in your financial situation can absolutely prompt the need to refinance a mortgage. So again, that's generic, but it's absolutely that's where it's that wild card. We just don't know. So many things that happen to so many people for different reasons. And then the last one, number 10, the last in the top 10 reasons to refinance your mortgage is equity utilization. So what does that mean? It means tapping in and just making sure that equity is where you want it, right? So if the home value went up and maybe you take some equity out to do this to improve your finances. I know, for example, I've done this before where I've access to cash to buy another investment property. I've done that many times. So again, it's or to put money back because maybe you did start that new business and now you need those cash reserves. It could be that you want to refinance and get that mortgage term shorter, or you want to put down some large amount of money to reduce that. So again, it's kind of these last two are a little generic, but it's true. The equity utilization is just making sure you got the right amount for whatever your goals are. Again, everybody's going to have their own unique reasons why they should and shouldn't do this, but these are huge. So whether it's interest rate driven, monthly payment driven, savings driven, debt consolidation, all that stuff, the long-term financial goals, all those are really important. But these are, in fact, the top 10 reasons why somebody should refinance their mortgage. So if you have questions, if you're like, dang, or if you think of number 11, let me know. But the reality is, if you do need something from the Mortgage Mark team, you can find us at mortgagemark.com. And as always, when you think mortgage, think Mark.